let's get you over to Bloomberg Radio Surveillance, where the PIMCO CEO, Mohamed El-Erian, is talking with Tom Keene and also guest host Steve Wieting on their radio program. Let's listen in.
Facing the U.S., that we need a common vision and we need a unity to start addressing these structural headwinds, because if we don't do that, unemployment will continue to increase and our debt burden will continue to get worse.
And we welcome Bloomberg Television. Stephen Wieting with me from Citigroup. But great, we had a Sputnik moment because the Russians were the bad guys. Who's the bad guy now?
I think the bad guy is our inability to get our arms around our growth challenge and our employment challenge. One cannot underestimate how bad the unemployment issue is. I call it a crisis. It's not only that we have very high unemployment, it's not only that labor participation has fallen, it is also that our unemployment problem is becoming more protracted in nature, and it's impacting the young. So we need, the Sputnik moment is a recognition that if we don't do anything, our unemployment crisis will get worse and worse as we go forward. And that has economic, social, and political implications.
Stephen,
it's pretty amazing to hear the different sides of the debate have completely opposite understandings of the causes of the downturn and sort of what the solutions might be, and they're radically opposed. Now, I think Mohamed made the point earlier that we should be clear when we talk about economic forecasts is that, the financial stability is an underlying assumption of any real economic forecast based on other fundamentals observed in the economy. And if we did not have more markets function properly, we lose an ability to track what we should expect out of the economy. Mohamed, I just know that we're sticking around thinking about worst case scenarios. Let me just bring up one other. What if we're in a case within a couple of weeks where we are making our interest payments, we are rolling over principal, but ultimately we are prioritizing and cutting other expenditures very dramatically, and some of these are contractual obligations, or at least they're being held off. How do you think markets function in that environment?
Stephen, it's a great question. I don't think we get there, but if we get there, markets will not function very well. Because the minute you have a disruption in contractual payments, you increase significantly the uncertainty premium. And the minute you increase the uncertainty premium, liquidity in the market goes down, and you start getting people stuck in positions. So this notion that we can avoid a debt default, but we can start having non-payments of other contractual agreements, and we won't get a disruption in the financial markets, I think is naive. I think that any disruption in contractual payments will have an impact.
Let me get you on record here, Mohamed, with your decades of perspective. Are we going to see a downgrade from S&P?
I don't control that decision. That's S&P's decision.
That Bill Gross controls that, right?
What I can tell you is that if S&P sticks to what it said on July 14th, right, then there's a high risk of a downgrade.
What are the ramifications of that? Forget about the economics or even market ramifications. What are the political ramifications of congressmen and women going home and speaking to their constituents in the new environment of a AA+ nation?
It will be a huge blame game. The question will be, the headline will be, who lost America's AAA rating? That's going to be the headline. And then there's going to be a massive blame game as who is responsible for this event. This would be a historic event. It will be difficult to reverse. Once you lose a AAA, it's not that easy to restore it. That's why we have to do everything to avoid. And let's not forget, Tom, that the global economy is not just facing the U.S. uncertainty. Europe is again starting to be unsettled. So the feel-good factor of last Thursday's summit lasted all of 2 days.